Seeing AT&T down 3.3%, of Verizon down 2.3%. So US telecom stocks dip after EchoStar agrees to sell spectrum licenses to SpaceX for $17 billion. French PM Beirut says French lawmakers have the ability to overturn the government, but not the ability to escape the reality. So a reminder with Trump's schedule for later on at 10 past 10 a.m. Eastern Time. He's going to be at an event hosting, well, it's a religious event that he'll be at. So he'll be hosting White House Religious Liberty Group. Seeing the US dollar hitting the lowest since July 24th against Swiss franc, last down 0.6%. So it's continuing to head lower post the NFP data from Friday. Saudi Aramco cuts prices for all crude grades to Asia in October. So Aramco cuts Arab light crude by $1 a barrel to Asia for October.
Well, hello, everybody. This is Donald J. Trump. You're behind the markets. If you're a real day trader, go real time at financialjuice.com/purchase and save 67% on a subscription. Isn't that one big, huge, brilliant deal? Come on, people.
French Socialist Party's Valord says the nation's financial situation is the result of Macron's policies. So again, French Socialist Party's Valord says nation's financial situation is the result of Macron's policies. Lord says we cannot back a confidence vote for Beirut. OPEC Plus receives updated oil compensation plans from members. Vallaud says from France says we're ready to govern if Macron asks us to. Again, that's France's Socialist Party's Vallaud speaking there. Seeing the Nasdaq hitting intraday record high. Also seeing here, Saudi Arabia sets October Arab Light crude official selling price to northwestern Europe at plus $2.50 a barrel to ICE Brent settlement, according to a pricing document. Saudi Arabia sets October Arab Light crude oil official selling price to the US at plus $4.20 a barrel versus ASCI, according to a pricing document.
You're behind the markets. If you're a real day trader, go real time at financialjuice.com/purchase and save 67% on a subscription. Let's make a big, beautiful deal, people. Come on.
As a reminder, at 10 past 10 a.m. Eastern Time, Trump hosts White House Religious Liberty Group. The video is on the feed for you to watch.
Voice news disconnected.
So just a couple of minutes away, and we're expecting Trump to host the religious liberty group. Seeing Broadcom shares rising 5.6% after a 9.4% jump in prior session. So it looks like the event with Trump hosting the White House Religious Liberty Group is supposed to be starting soon. And Trump arrives to the podium. 10 minutes away from the top of the hour, we get the New York Fed inflation expectations. The prior for August, the prior looking at July, it was 3.09%. So we're going to be getting the data for August. NVDA swung to accompany Trump at state banquet in the UK, according to Sky. 5 minutes ago until we get the New York Fed 1-year inflation expectation with a prior 3.09%. This would be for August. Also, Tim Cook, Apple CEO, has also been invited and may attend the state banquet in the UK, according to Sky News. Also adding Larry Fink, Sam Altman are among others to attend the UK banquet. US Chief Justice lets Trump oust FTC Commissioner for now. So again, US Supreme Court allows Trump to remove Democratic member of Federal Trade Commission for now. One minute ago until we get the New York Fed inflation expectations. Ten seconds. 3.2%, 3.2%. So New York Fed 1-year inflation expectations rises to 3.2% compared to the prior of 3.09%. New York Fed says job finding measure at lowest in data back to 2013. Long-term inflation expectations steady. Also adds that job search prospects seemed dimming. Also August year ahead income earnings expectations mixed. August home price rise expectations unchanged. 5-year ahead expectation inflation unchanged at 2.9%. 3-year ahead inflation expectation unchanged at 3%. Also, August credit access expectations deteriorated a bit. So August survey found worst probability of finding new job since June 2013. And it also adds that in August, public saw greater chance of losing a job. And in August, public expected higher unemployment a year from now. Also, perceptions of current financial situation lost ground in August. We have posted out the New York Fed inflation expectations August 2025 report on the feed for you to read through.
Thanks for the tea. Appreciate it. Said thanks for the tea. I appreciate it. I said thank you for the tea. I appreciate it. Thank you. All right. Check 1, 2. Yes. Do. I am live, baby. Check this really quick. My camera's out. Let's see if we can get this camera up and running.
According to Russian agencies citing finance ministry, Russia and China are in discussions on Russian corporate bond placements in the
Deactivate.
Chinese market.
Activate. Oh, yeah, baby. There we go. All right. Turn that off. Turn this on. I think that every September, I tell my daughters, now one daughter, please do not touch other people at school. Every year, I'm like, no touch. Don't touch them. Don't be sharing your cups. Don't be sharing candy. Don't be licking your pens and pencils. And I typically stop loving on my kids like beginning of September when they're going back to school, and I get sick without fail every year.
Had the
And
TP saying that China is moving to reopen bond market.
Voice news disconnected.
I'm feeling it this morning. I think my wife went down, and then the oldest went down, and the youngest went down, then the wife, then was it oldest wife, and then youngest went down. Or no, youngest went down first, then wife, then oldest, and I was like, maybe I'll escape it this time. It's like this morning, or yesterday, I started feeling run down. Yesterday I was was doing some electrical work, and I couldn't get anything complete. It was like all day long to get anything done, and I just started going like this. Like, I woke up this morning, and it's weird. I always have a sore throat now, from streaming, so I can't. They all have sore throats. I don't. I have just my normal sore throat from dehydration and overworking my vocal cords. But I woke up this morning, and I went to bed nice and early last night. Woke up this morning, and I was hit a wall. So I don't have a fever or anything. I don't have any sore throat that's abnormal. But I hit a wall this morning. Woke up, and I'm like, I can't do this. And I think those are the two things that always get me. It's usually temperature gets me, sore throat. But I have none of those things. I just feel really run down, pretty bad. And I don't have COVID either. I checked. But I don't feel well. So I want to let you know this morning that I don't feel good at all. I feel very run down and slow. I'm of my wits and all that kind of stuff, but I'm not feeling it. And of course, this comes from return to school and the dirtiness that's children. So we got to look at this morning together and see what's up. By the way, I wasn't on Twitter all weekend. I did some auto posting and stuff. I missed the whole entire "we're gonna crash" thing. So we'll start to talk about that. I did see it on Sunday that conversation was taking place. My feelings of bearishness are not how I trade. I made a meme post last week where I said I feel bearish, and the intent of that post wasn't that I am bearish. It's that I feel it. And I think the feeling of being bearish is something that every trader has to combat, especially if you're a perma bull, I guess, right? Like me. When you have to like work through that emotion and the thought process and all that other kind of stuff. And I saw that DCP Cox made a great post over the weekend. It popped right up in my feed on Sunday. I missed that whole post and all that stuff. I didn't know that everybody was so bared up. And I think it's okay if you feel bared up. I think that's okay. I think that's normal part of trading. And there are reasons to feel bared up. We've gone through this. We've gone through. Let's start. Like we went through the double correction fear, right? Where we recover to the drop in springtime. So like the February 18th, we dropped, and then we go back up to that point. And the first fear is, are we going to fill that high and start a double correction, which would mean top of the market's in. That's the big astroturf on that, right? And fear, maybe we should hedge here. And of course, buy the market as we continue to go up, as long as you're hedged. I think GS made a good point on this. They said it, I think, in the fall or spring. I can't remember, but they said stay long with a seatbelt. No, they said it in November. I think it was GS or JPM, one of those guys. One of their outlooks, they give like a global outlook and then a U.S. outlook. And in one of their outlooks, in the first page, they gave the possible outcomes for tariffs 2.0. Like, this is our baseline. This is the worst it could get. But even so, their statement was stay long, put a seatbelt on with a hedge, and on any kind of pullbacks or doom, you buy the market. And I think they said that again recently. I think they came out like a week or two ago. And most of these guys have done that. Like Rubner's done that. He's no longer with GS, but Pavorsky, all those other guys. I think even Charlie Miguel got to some extent. So I think the idea here is multifold. We have a situation where we can go spot up, vol up again. And I think it might be a hated trade to go up and pop the collar and start squeezing. Normally that stuff all comes back. It's like no one wants to trade it. Everyone wants to pull back. Trade 600, trade 630, whatever it is. Then nobody cares. Just pull it back. Maybe to the weekly trigger, 3-4% pullback. They feel like they can all get on board there and take it up into the end of the year. But that feeling of a crash or a roll or something like that is normal. We've gone through the are we going to have a double correction? Are we going to have a short summer bull run? Now we're heading into the season of volatility. That was last month. And then this month is Beartown. It's technically October, but it's normally you get the print in October. So it doesn't normally start in October. I've heard that argument. It's not. It's that you get paid in October for the roll in September. And that hasn't happened yet either. We're also in this other funky thing where the street historically, where we need to talk about FOMC. I'll be 100% honest with you guys. I don't think that there should be any cutting. None. I like cutting into a recession. I love the idea of tools being available for the Fed and for Treasury for when things are really bad. And not only that, fundamentally, you got to remember something. This is important. And it's very important. No matter if we get a cut or not. This is very, very important. Pre-2007-8, you wanted to have a restricted environment because the economy was solid. It was always strong. And we went to zero rates in 2008 because the thesis was that we had done so much damage with fraud that zero or negative rates, which was a big discussion at that time and later on, could help to restart the economy. That was the reason for it, to restart the economy. And whenever you saw rates at zero, it showed the effect of 2008 carrying over into years later, 5, 10, 15, 20 years later. Maybe not 28 yet, but close, right? So getting back to that is kind of the idea, that can you recover from that fraud that took place in 2008? And what else I find fascinating right now is there's an argument being passed around that we're in this housing bubble because of recklessness with policy, not from or recklessness from the wealth effect, which is kind of true. The wealth effect is kind of true. It does have that effect, but there's some other insidiousness in there that nobody wants to talk about. Now, you've heard me bring this up in the past. We've made a more resilient consumer too. More resilient. If you've never looked up the wealth effect, I can read it to you, explain it more to you. Your perception that you have more money than you actually do. I don't put as much into that. I put a lot into the resilience of the consumer post 2008 due to laws intended to make you more resilient. And that has a great consequence for those people or the following generations. Those people were never really let back in, but following generations that hadn't been wiped out in 2008, they really had a leg up. They really did. And they're forced to be a little bit more responsible. Like the free money party time and, hey, we'll just wash you out and move on to the next round of young people. And we'll wash you out now too. That's gone, or it kind of was gone. I noticed it in housing. I didn't know what a hard money lender was. I thought it was like the mafia or something. Seedy individuals. It wasn't. It used to be back in the day. You could, you give them free money to buy whatever you wanted. 1, 2, 3, 4 houses, and people that had no business. Signature loans, remember those? Signature loans with arms. And, it was always, whenever they would ramp that stuff up, you'd flush all those people out. And those days are over. And so there was a giant vacuum that needed filled, and private money came into the equation. And private money has their own rules. It's not like the government or anyone else. The government already made the rules, but this private money had rules if they gave you money to fill that gap that the banks were unwilling at that point to do. And it's very lucrative. But at the same time, it was brutal. The rules that were put on that money lending from the lenders themselves. This is that private money to buy more houses. I own my first house, and I want to rent a little bit of residual income. Now, this is pre BlackRock and all these other VCs and PE money getting into the housing market. And there was a generation, an older generation, getting out of the housing market. So when I first started getting into housing, there was an old guard of people that owned 100+ properties, at least 100 to many more. And we went through a round in the United States of reform as well for the tenant. We need to fix the water. We need to fix the lead paint. We need to put energy efficiency back into these rental units. And the structure of these older owners, they were making, let's say, 10% profit when all said and done at the end of a year. And they couldn't see the margin in that by having to renovate and bring these properties up to standard. This is across the U.S., especially in rundown places. So they started cashing out. And so I had friends at that time that maybe owned 1, 2, 3, 4, 5, maybe a few that owned like maybe coming in at 10 properties. And then there was an explosion of buying up these multi-family or multi-rental units. And how that happened from this new generation of investor, how that took place was because they didn't have the free money, they had used hard money. They learned how to manage money. And so what they were doing was they'd do a few buy and flips. So they'd do like buy and flips. So they'd do like some wholesaling. They'd make a bunch of cash. And they hated paying down the points and the restriction of working with hard money lenders. And so they became buy and holders. And so there was like a 5-year period where I remember everybody started saying, nope, I'm going to buy and hold now, buy and hold, buy and hold, buy and hold. And I watched these friends who had, gone from 1 to 5 properties, maybe 10, start accumulating properties and by the 10s, by the 50s, by the 100. And this older generation was able to hand that off to this younger generation all through blood and sweat. Now that's changed since then. There's consolidation going on in housing right now. It's been going on now for maybe intensively for past 5 to 8 years, maybe. No, 5 years, I think. So it's became prominent. At any rate, my point behind that is that I am in disagreements with loosening, and conditions are loose right now. Somewhat. They're restrictive and they're not restrictive, and there's some other stuff going on with this rate cut, where the bond vigilantes are actually doing some tightening right now. There is some actual tightening. We had like QE light, for lack of a better word, indirect QE. We're like slowly shifting back into QT, on the idea that we may begin a loosening cycle with rate cuts. And then you have, on top of all that, this huge narrative that Jerome has not said. Like Jerome specifically and clearly, like quoted at Jackson's Hole that he's willing to do a cut. And not a cutting cycle. And since then, this whole thing's been clouded. There's been, like you talk, like from Fed governors to Wall Street to the market to the fucking, I don't care who it is. Everybody says we're going into a cutting cycle. And that might be right. And Jerome hasn't said a word about that publicly. Hasn't shot it down, hasn't shot Waller down. That could potentially mean that we are heading into a cutting cycle. And then that brings up what? Brings up the question of historical examples, right? We could trade sideways or squeeze up, and then you go into that language change at a rate cut. Every rate has moved forward unless some other stuff changes, maybe some policy change or something like that. And we're not, you got to be in that data. We're not in that data yet. We're not. We've got slow degradation, but we're not in the, hey, we're going into a recession. We're not there. None of the data suggests that. And the consumer hard data is fucking way better than I expected. So we're just not there. We're not even there to do it. So we're kind of in this weird fucking place. And, if we start cutting before we get to a recession, that would be where we're cutting down into a major bottom. Historical example says that once we move into that regime, we actually roll fairly consistently. And the street will run us, or will front run that right around now. So I think that's why the needle, like you can hear a pin drop. Whether we do or don't, nobody knows. Or do we trade sideways, or do we squeeze fucking balls up into that cycle? Because they can take all your money here. They can literally take all your money. They can literally vertical us for like the next week or two. We can pop the collar, go fucking vertical, and take every last short or front or any kind of front run you think you're going to do. If that does happen, so you can't even position for it. It's brutal to position for that stuff. So I think that the idea here is that you trade what's in front of you, and no matter what you think. And I think we went over this last week on a stream, right? I don't know if that was the private stream or if it was a public stream, but I showed you guys how you can look at triggers to catch a corrective movement. I showed you how price will sometimes break below the daily trigger, for like you have a pullback to the daily trigger, and you have a correction to the weekly trigger or near it, but the daily trigger does not follow. It literally does not follow down. Now, if the daily trigger follows down, you got something to worry about. That could infer a bigger roll. My point there is that you're still accumulating and buying dips on the hourly, on the daily, until you see something suggestive of a top. I think I talked to you about this in a stream last week. It was very important idea is that you get long and you stay long the duration. You chase yield until you see that real roll. You understand what I'm saying by that? Let me explain it to you one more time right now. We're going to go look at it right now because I've got some great examples of it. And we're going to go back here in time for a minute. And we're going to look at this one right here. What is this? 25. That's a good example, but I'll show you another one over here. This is a good one from 2023. But the better one, it's not even a better one. They're all like this. That's every time. But the thesis here is that if price is going up, well, first you got price, right? HT, DT, WT. There's some other ways this can be done. We can mark a bottom underneath the monthly trigger and start turning up with triggers underneath us. We can do tactical longs on that kind of stuff. But generally speaking, when you have price, HT, DT, WT in order, you're in a risk-on environment. And I think that is critical for you to be able to identify that. And it's easy to identify that. Not hard. You got the literal, it's in fucking crayon for you. But to identify that you're in a risk-on environment and that you have to stay risk-on buying these pullbacks, right? And you ask for those pullbacks. Can I get a pullback to the daily trigger? Can I get a pullback to the weekly trigger? And I don't want the daily trigger to chase price. So I don't want to see the daily trigger breaking through at any point and through any point, through any point, through any point. Even if price goes down there, you just don't want to see the daily chase it. And even when it does, you're given time to exit in an orderly fashion. The moment you see the daily trigger cross the weekly trigger, it's literally fucking predictive for you. Hold on here. It's telling you to go a little risk off during this time period. There's the weekly trigger. And here's the daily trigger here. And this right here is enough for you to say, watch out. You even have a high that's by this prior high right here. And here's where the key comes in, is you have to stay long and chasing yield so that when you do finally encounter it, you're not losing anything. You're literally given the exit before the drop. Do you know what I mean? This is a critical thing to note here. And this is when you're told to get off the train. So critical point is this cross up here. When you see that, it's important, right? Risk off right there. Daily trigger crosses down, risk off. And we're not there right now, are we? Let's just look at this. We're not, are we? There's no price under the daily trigger. There's no daily trigger crossing down. And so you have to play musical chairs until something like that happens. You stay long, you stay exposed, and you keep going up and up and up, even if you feel bearish. It's okay to feel bearish. I feel bearish all the time. I usually have to work it out. I usually tell people, too. It's another thing that I do. I'll tell you, hey, man, I'm feeling bearish here. Does it mean I am bearish? No, but it means that I want to be aware so that I don't have a scared Pikachu moment. And look at us grinding up right now. So that's just for, I just want you guys to understand that it's okay to be, sorry for my camera not being on. We'll come back to this in a minute. It's okay for you to be bearish. It's okay for you to be afraid. It's okay for you to be like, oh my God, we're going to roll once they cut these rates on FOMC, or we're in Bear Town, or whatever it is. You're just aware of it. You know what I mean? If the more market awareness you have, the easier it is for you to identify if something were to happen. And you can trade that. Now, Friday, to me, it looked like a bear trap on Friday. That's what it looked like to me. I watched NVDA on Friday. I watched NVIDIA on before the open on Friday, and then throughout the day, all day Friday, and I just kept seeing volumes coming in. Just like, must buy everything. Buy it all. Buy it all. I did not see any behavior that looked like a big-time crash. And the structure of NVIDIA looked like big-time crash. So before Friday open, I'm like, man, NVIDIA looks like it wants to fucking go to the depths of hell. I mean, like, nosedive and no recovery. So I'm like, well, I'm sure I'm not the only one looking at that and thinking that. So let's see if they're buying it or not throughout today. And are we ready for a crash today? And I didn't see it. Saw accumulation, huge volume accumulation. And then we saw it again on Friday close. And this has been the narrative for the past, I want to say the past at least, I see it I've been seeing it at least once a week it's like it's been fucking 3 out of 4 weeks every month. I've been drawing these white lines in for you recently. I know where they are, but I draw them in for you because I'm like, these guys need to see what price action is on these white lines, and we watch it together. And I got another one up here above. Why? I'll tell you in a minute. There's a reason. But do you ever notice when we're coming down and I'll draw a white line on this show? I'll be like, so let's say we're blasting down in some kind of a pullback, right? Hold on, let me move this over. Like, we'll be blasting down in some kind of a pullback, a corrective move. And I will say something to you like, watch this white line right here. And they're like, it's like blood, death, destruction. And it's like, whoop. And I'm like, that's what they needed right there to open this. Then they just like we're talking pennies, 15 pennies, 50 cents, 13 cents. So if you pierce where that demand is, it infers automatically that that's bullshit buyers, and we've failed to do that. We've failed every fucking week. Like, we do the big pullback once a month, but every other week of that month is like, nope. And then they just ramp it, and they ram it right up sellers' asses. So we have to just keep watching that closely. Of course, that's step one. And there's also a collar on the market right now. And there's potential here. Now, this is the line right here for that. Right in here. And as a matter of fact, this little bad boy, see this little thing right here? I'm going to show you this here in a minute because this was the first attempt at popping the collar. You could theoretically say the collar was popped. You could. Technically, it was. And this is inferring right here that there's potential for a collar pop continuation. I'm going to show it to you here in just a minute. So let's take a look at it really quick. Sorry, I feel like shit today, guys. I feel really horrible. Let's go over here, and I want to show you a couple things here. So let's bring up something important. You guys know I've been tracking the collar for a long time. You guys know that. Not only do I track the collar, I do think it's tea leaves or astrology for men, or maybe not for men. Astrology for maybe retail. I don't know if it's just retail. I'd say astrology for market participants. But there is some information in here that can really matter. And we're going to look at it right now. And I want you to see something here. This little bad boy right here. This little sausage. You see that thing right there? That guy. Wait a minute, what just happened to my thing? Get back on there. That guy right there. And you know how I feel about this shit. I am always watching like almost like Monsters Inc. or something. Or is that Monsters Inc.? I'm always watching you. I'm always watching for known inflection points, like known major inflection points. And I'm usually out of the trade by that point. Like, I ain't messing with that. I'm not, like, by the time we get close enough to this, I'm like, nah, or even down. By the time we get down there, I want nothing. I love the middle. Now, not being stuck in the middle with you, not instigating a trade here, but hey, I'm going to sell this down. I'm out before we get there. I'm going to buy that up. I'm out before we get there. That kind of stuff, right? Accumulate, distribute. But whenever we are going to break down or break out, I am always looking for the tip. Now, the tip doesn't guarantee a breakout, but it does infer the potential for a breakout. It is on, it does count towards, so if we got this major inflection point, this one, if we're like down here doing this shit, and then all of a sudden I'm like, whoopsie, we break above it, I'm going to give the onus to the buyer. Now, I'm not long here, but I am looking for that buyer to go above it, make a new high, and start breaking out. And that is productive. So this looks productive to me. You can see it here. You can see it here. And you have to be honest with that to yourself. Even if you're feeling like I'm bared up, or we're gonna have a crash, or they're gonna front run this shit. And even if you're still believing in that and you want to trade that, they start popping this thing up. Up. By the time they come back down, your fucking puts are gonna be destroyed. Shorts are gonna be destroyed. You're gonna be destroyed. So price action is disagreeing with you right now. And I got something else for you here too. Momentum is on its way up. I tell you this all the time when we're in major resistance. If you give price enough time for that fucking like higher frame velocity or momentum to get up there, we go vertical. We blast through. So be conscious of that as we move forward. And I want to show you what that looks like when we have broken or popped collars. You want to see one that's messy? How about this one? This sounds pretty fucking messy, right? Like, bye-bye. Oh yeah, now you got to buy. Sorry. You know, wham, wham, wham. Now, if they happen later in quarter, they tend to not be as productive. You like to see them early. Here's one right here. This is a little later in the quarter. Did a little bit later in the quarter. We did pop that collar right there. This began in December 5th. This is late November. So this is a little bit earlier than this time around. Not as late as the expectation of this one would be. We popped this collar earlier. We popped this collar earlier. And this is the one that I want to look at right here. This is March of 2023. We did this one late. And look at that. It's a little bit late here. And we what did we do? We tipped our wick up, didn't we? Came back down, and we're right about here. And we literally went what? Fucking vertical. Yeah. Now, I don't know what happens here in October, November. I don't know if we go up in November or none of that stuff, but just that right there is like, you're bearish. Like, you don't want to see that, do you? That would make you very angry, wouldn't it? That can erase people. So, let's go back over here. And there's something else I want to show you this morning if I can. I hope it's still here at the moment. Let's go back and look at SPY really quick. I want to show you guys one other thing here. There we go. I want to show you guys one other thing. When we came up here, right? We came up here. I want to show you what happened. We had this like, and this happened on Thursday before Labor Day. The first time it happened, and right in here, happened right in here. These guys got dragged to the top. And we saw something else this morning. Now, and then they disappeared. So we come back down again. And I'm assuming these are the same people. They're down here buying all this. And then they're looking to catch their print, come back down again, buy it all again, look for their print, come back down again until we're done doing this. So this morning, I noticed that the same shit's happening, or at least right now. And they come and they go, or whoever this whale is, he comes and goes. But I do want to show you that, this is not gamma here, but volume, current. And what the fuck is this guy doing? Who the fuck is that over there? What the fuck are they doing? This is two-day call buy at 66.50. Who the fuck is that? It's the same asshole. He's got a bid on at 66.50. This ain't you. And that ain't me. I'm telling you, that is not you and I. That ain't retail. So this guy is here right now. I don't know if he stays or doesn't stay or whatever. But he was here this morning, and that automatically pops us up. So let's go back to a 1 hour here. Get rid of this. Get rid of this. Get a nice little double cup and handle, don't we? I'm sure if you're a bear, you're looking at this and you're saying, we're going to do this right here, right? And it's going to be blood, right? Failure on the cup. Blood down here. Real trade up here. Matter of fact, it says CJJ. Cheap ass calls. Used call lot. Somewhere down in here, right? Either up and away, something like that, right? Let's look at this really quick. You've got another cup, don't you? So if you don't sweep that low, you can do something like this, right? So if you don't sweep that low, some of you think that, right? Then bam, up there. Right, so you either have to hold the cup to go higher, and you got another cup down here that could send us lower if we lose this over here. So I'm looking for, and there's one other thing in here, which is this yellow line. This is the pop collar. On here. It's up in here, right? This is that trade popping the collar up here, right? So you got CJJ's cheap ass calls. You got Kevin Jim James used call lot. This is the normal expectation that we shouldn't take called, or we shouldn't take, see here, we shouldn't start new longs unless we're able to break out above 650 and hold it, right? And we have some help. We need help to break and trade above 6,500. So this one right here, this hourly trigger and this half-hour trigger need to help. And look at it here. It failed, didn't it? See how it failed right there? We need that help, don't we? We need that hourly up here. We need that half-hour up here. And to some extent, we need what? The daily trigger up here, right? We might even need that daily trigger to give us the oomph that we need to drive us higher, right? And, you know, make these, that's the top gang, myself included, pain, right? So the simplified version of this is if we can trade above 650, right? We're looking for what? We looked at the collar earlier, right? If we get that pop up, we get that second high, you can start taking that trade, right? Risk on. Otherwise, we're looking lower, aren't we? You want to be buying dips on the hourly trigger, the daily trigger, half-hour trigger, that kind of stuff, right? So just in here, we got a little bit of this too. We got some of this like Friday low stuff to sweep out. We also have Wall Street doesn't like chasing on Mondays. That's real. I'm not kidding you. You open green on a Monday, Wall Street doesn't want to chase it. They will just sit here and wait. And so I think that's my thesis this morning. And I posted it for you in the Discord, and I posted it for you inside of on Twitter, which would be this. You can take intraday trades if you want. You know, you can take like little ramps and stuff like this. You can even take this trade if we go up there. You know, until we hit this thing comes back down, you get out, right? Come on here, do that one, blah blah blah, right? But otherwise, for most of you. You're waiting for some kind of a drop here for accumulation. So let me just show you this here. There we go. So we got this one right here. This is solid, right? Hold on here. We said on Friday before the close to accumulate, right? Like accumulate, right? And now we're just looking for more ads for accumulation, either above or lower. We want to look on Friday lows, and let's look at where they are. So you've got this ad person right here, and you're going to expect them to be right about here. There can be some argument made that they're over here, or that they're over here now, Cap. But I always like to come back to the second. Write this down at home. I always like to come back to the original buyer and think that they're only one hourly candle above. It's possible it's on the 4 hour. So we're going to switch to a 4 hour basis really quick. And you see these fours right here? There's a 4 right here too. See all that? There's a 1 and a 1 right here. I guess that's all we need. We don't need 2 of them. And there's a couple more here and here. So let's go look back on a day. Let's see where the day is. It's way down here. Cheap ass calls way down here. Used call lot right here. Let's go back to the 4 really quick. I'm just check the 4 hour. And that's kind of where I'm at, like right here. Right in here. I understand the argument that we're already there. I understand it. I get it. And you've got this 4 hour candle in here. Just look at this really quick. Oh, hold on here. I'm losing it. Some reason I'm losing everything here. I'm losing my my stuff here. Hold on here, guys. I got something to do here. There we go. So this is a let me go back to a 4 hour candle. Get rid of this. And get rid of that. Let's just get rid of it for now. And let's just look at this candle right here. There's the top of that candle right there. There's the bottom of this candle right here. And we just can't lose this one right here. This is 647.20. We can just go right down here. We can actually sweep all this if we wanted to. That'd be fine. And there's a lot of room up here too, right? So you could say that the bulls are still alive here. They really don't. They already took half of this candle. You can see that wick right there. You can actually pull all the way down here. Still be alive up here. Go down here. Hold on. Actually take that up. So we can move this on an hourly basis. All that can be taken down here. This is where my used call lot is over here. This is that. Are we back in the hour? Yeah. like right in there. If you get any kind of like a roll in here, straight back down, straight back up, right? You just Johnny on the spot, used call a lot. You're not going to get too crazy with this breakout trade unless we actually break out above it. So if you're able to get above and start talking about putting some risk on, but we're not there yet. And these are where the sellers are. So it's kind of risky in here. So you either want to be the buyer on a low. You either want to be like buying anywhere down here. You know where the real buyers are down here. We'll do this one, right? You do that one, right? Same group. Here, 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 here. And if we begin to chase or run away, we know when to put some risk on, right? Anything over that 650, 6,500, you can start chasing that too. Let's go look at, and you got a cup and handle here too, right? You get the cup. You got the tip. And then we're out of here. Make this a little bit higher. They can go just to there. You already kind of see they did what they needed to do. See that right here? See that tip? That's all that's needed right now. We don't have to go up anymore. I would like to have seen this 650 but for breakout, but we don't even need it. They've already done what they needed to do. That's showing you strong buyers. So we roll down here. Maybe we catch a nice little wick down below. Or we look for behavior saying we're going to go. So we start rolling down here, zigzagging. Let's say we stop and start to show that strength again. You know, marked low, prior high, higher low, higher high. We can then jump on that trade too. Crank that bad boy to the upside. So just watch this. Be patient. This looks like a roll, but I'm not sure yet. Where's 12 o'clock? Right there. There's 12. Let's go back over here so you can see it. Hold on a second here, guys. These don't ever. What's going on here? These don't ever line up. So this is going to be a dotted line. This is going to be a solid line. Get rid of that. We can move these around. So I want you to see this here. Make this bigger so they can see it. Dotted. Solid. Right? And if we break above here, right? We can then start to talk about buying that dip. But otherwise, just be looking for this roll. Remember that the street hates buying this shit. They like buying it lower. We know where they are. They're right in here. They're right here. This is 645.01. We'll watch this close together. Good morning out there. Good morning, Stacy. How are you? You guys are having issues with the stream. I did reset my internet this morning and my computer. Can you try? I'm just reading the comments right now, the chat. Have you tried resetting? I'm having some issues on my end too. It's not just you. I'm having drop signal on my end. It was down a little bit. You want to go back and watch you definitely want to go back and watch what I went over if you missed it. It could be on your end too. If everyone isn't experiencing, let me just check here. It says my stream health on YouTube is healthy. I was having some issues loading the charts here, but it says my upload is fine. I always try to reset my browser or even my home internet, especially lately. If you've got like Windows 11, I don't know if you do or don't. If you got Windows 11, they're like running full on AI at all times right now. So I've got like resetting of all kinds of back end stuff like once a week. I'm getting forced updates on Tuesdays that are brutal to deal with. So it might even be on your end. You might want to like restart your computer, update, restart your internet, and update too. We have so much being taken away from us right now. Did any of you guys see Red Letter Media, who never makes those videos? They made a video on what YouTube is doing right now. They never make those videos ever. They're a lot like me. They don't care about how many viewers you get. They don't care if they lose viewers. They swear, they cuss, they do they do the shit that I do. They're not there for the views. They made a video this weekend about the changes in YouTube with age verification, all that kind of stuff. So there could be a lot of that going on right now. A lot of like humans are. You should watch the video if you have a chance. Go to Red Letter Media, watch their take on it. It's great on what's going on with YouTube right now. Basically, all these companies are just fucking handing over everything to AI. There's no humans anymore. And they're like crafting bubbles and algorithms, and then the algorithms are. Do you guys know what an autoregressive algorithm is? It like has a period of time that takes information, and then it eats itself eventually. And that's what I see. On like YouTube searches, I see that. Like I relate it like this. Like back in the day, if you were to go on YouTube and search, I don't know, roof my own house, paint my house. It's a good one. Paint the exterior walls of my house. If you were to do that handing off everything to LLMs, you could just find a litany on the subject. Litany of videos, different creators, all that kind of stuff. If you do that today on YouTube, that's not what happens. They give you what's in your bubble. So you get some responses like 10 returns that they think you like. And that could be based on all kinds of stupid shit. Your economic background, your color of your skin. I shit you not. Your politics. And then what they do is they'll regurgitate shit that you subscribe to in its place. They can't even return more painting videos. They'll give you like 10 or 20. And then it just implodes on itself. You can actually see the returns are like, oh, now I'm watching. I searched for painting the exterior of my house, and now it's sending me dog videos for when you're not at home. Like the 11th return is something that you already subscribed to, already watched. So they're already imploding on each other. Those are called autoregressive algorithms. At any rate, that might be happening to you too. Is my point is that you might be having problems viewing us because of what they're doing, them or Windows or whatever. Not exactly that, but the other things that they're doing. Looks like sellers trying to sell us down here. See if we can catch that roll. It's really close to this this hourly trigger. Hopefully we can get through it. Let me just check the 30-minute really quick and just see if there's any yeah, we're a little bearish here. Watch out. Hourly velocity looks kind of bearish on a 30-minute basis, or at least a little rug pullish. Watch out for the roll here. If you're long, be careful. Yeah, we never cleared this down below here either. Yeah, we should roll down. We should roll down today and tomorrow. We got to buy a dip. I think I said that on Friday. That should not be unexpected. Or maybe you missed the show. I don't know. All right, I think I just said it. You can go long above 650, but otherwise you're looking for pullbacks. You are 100% looking for pullbacks. Or as of right now. I wouldn't be caught dead long here. We were at the top. Yeah, you're looking for pullbacks to get long, where they are, where the buyers are. And you want to be checking, too, to make sure that they're fucking there. Because if they're not fucking there, we can't buy a dip. So we lost Twitch. Did we lose Twitch? If it just heads up, if you lost if you didn't watch this show earlier, when I was blabbing my mouth off or whatever, you should go back and watch it. I'm going to warn you now, you should go back and watch it. No, you are viewing me on Twitch. So it's just some people. It could be that the internet's down across. Let me just check to see if the internet's down anywhere in the country. It could be regional. Hold on here. Let me look. It's possible. Says there's large outages reported in the East Coast. Virginia has some big ones. Chicago has a little bit. Ugh. Hey, Time Clock, what are you doing? Is Time Clock back? What's going on, brother? Good to see you, man. Yeah, I just lost Twitch here. I lost Twitch here just now. Yep, I lost Twitch.